Hello traders everyone, and welcome to our new video. Here it's a free one. So basically if you want some more additional updates on the markets that we follow, make sure to check us at wavetraders.com when we share plenty of updates each day. But in this edition, this will be a free outlook. Basically I will look at the crude oil and also euro dollar, because crude oil, as you can see, is coming to the downside this week. It's been also turning to the downside weeks earlier. So it looks like that these lower crude oil prices could possibly help us to bring us down the inflation as well. It's been that correlation pretty strong one since start of the year, and obviously years before. And if we look here, we have the CPI year on year, and you have crude oil here in gray. And obviously crude oil could be leading the direction of potential prices of inflation in general. So I'm thinking that if crude oil is really going to see the breakdown, which by the way could be happening right now, I will look at the charts a little bit later, then of course we can anticipate that even CPI data will continue down towards 2%, and this will increase odds that maybe the Fed should really cut the rate soon. Obviously there is speculation that this will happen already in September, but the question is how much they may cut this this year, how aggressive they will be. But definitely we have to understand that lower CPI, lower crude oil prices make speculators bearish on US yields, which are coming to the downside quite nicely. Okay, so you can basically expect that dollar with with this correlation would also stay very weak. You can see that dollar index here in green is having a very nice and strong decline here, which I believe is sooner or later will break below 100. At the same time, we see US yields here. Hide this for a minute. We have US yields here, which by the way can even move down towards 3.25%, 3.3%, which was the swing area back from April of 2023. So even if this is a corrective decline on the US yields, I think that there is still plenty of room for this weakness to resume, and this can keep dollar in bearish pressure as well. So if we look firstly here, before we go to some of the euro chart, if we look here, now on crude oil, basically I have been tracking this triangle for a while, and even highlighted some bearish head and shoulders pattern that I've been posting here weeks, months back. And this, by the way, is still very active, very attractive. If we can break the neckline around $72, then I think that, or $70, then I think that much more weakness could be in the cards. And with that combination, I'm also looking at the Elliott wave principle, because Elliott wave is my first tool to look at the markets. But then, of course, I also use other correlations, other market analysis as well, maybe to confirm my outlook or bring the confidence higher. So here I'm thinking that this break to the downside can be happening on crude oil. Basically that's an ABCDE triangle that we have been tracking, but of course the key will be to see maybe the break and a daily, even better a weekly close below $70 per barrel. Okay, so if this can happen this week, keep in mind that tomorrow we have this Powell who may announce a lot more about their rate policy tomorrow, and if he will be very dovish, maybe even more than market expects, who knows, then we may expect that dollar will continue even lower. And if crude oil will be falling at the same time, this could make us think that, as I said, inflation will be even lower, and this can be even more bearish for the US dollar. So with that being said, I will have a close eye on the euro dollar. Now, what's happening on the euro dollar? We are seeing some very nice and strong push to the upside. I believe that we are coming out of a triangle here, and we are testing some important resistance right now, I should say at 1.1143. Okay, so this could possibly cause some near-term retracements, and ideally if this retracement will show up here in the near term, this will give traders an opportunities to join the uptrend. Okay, so I'm looking for some kind of a fourth wave setback that will later on take us even higher. So in such case, watch this invalidation level at 1.10. I think that that's a pretty important level. As long as we are above that, I think that we are in a bull run. So clearly watch out for these potential setbacks that can give us an opportunities on the long side to join this trend. Also, if maybe some would say that this rise from, let's say, as an alternate view, obviously from October is wave B, still fine, but you still want to see some completed impulsive rise here away from the most recent swing lows here from start of the month. You want to see completion of 5-wave movement before you may say that maybe some final lag within a wave B correction is coming to an end. So for now, that's not the case. So even if there would be some limited upside, let's say in a few weeks, I still think that after the next pullback, we could see more gains coming while the market is trading above 1.10 level. Okay, viewers, thank you very much for your attention. I hope that you enjoyed this video, and again, make sure to subscribe to our notifications here on YouTube channel, because each Monday we are doing regular free Elliott Wave webinars. So make sure to be with us on Monday. Have a good day. Bye.